Good evening and welcome to my midweek recap here for the S&P 500 and plan ahead for the remainder of the week. Real quick, in my last video I mentioned this 286.10 level. Reason being, if you're short versus a move like this, you're shorting versus these highs. And what happened on Tuesday? High on Monday was 285, was that 96? Gapped straight up over that 286.10. So anyone who was short this day was essentially forced out of their position if you were trading properly and you had your stop in place. So that led to this initial push up here on the open. That led me to take a position on this initial flag break. Of course, in hindsight, you can see the flag didn't break till over here. But on this initial peak above here, this was a very strong move up. Volume did confirm a move higher, but as it turns out, it was a trap. So I got in here these 287 calls at 45 for the Wednesday expiration, I believe, and trailed me out down here at 36. So I sold almost the exact low, and the trade ultimately did work out in my favor had I held the position, was a little bit more patient. But such is the case, and just had to move forward. Midday on Tuesday did put in a lower high and started to sell off, put in a head and shoulders type of pattern on an intraday basis, which most likely got a lot of bears more interested in the trade, couldn't hold above previous high of this 286.63 and rolled back down through it. And today, price action came up, tested that same level a couple of times and started to roll over again. As I said in my previous video, up here is reasonably to expect a supply zone candlestick on the S&P 500, the SPY at least, doesn't look overly bearish and it's not necessarily a reversal candle. But real quick, I'm going to pull up here the S&P futures if it loads, and we'll see what the daily candle looks like over here. Was much uglier. There's a red inverted hammer, could be a potential for a one-day reversal. Didn't quite put in a new all-time high for the futures, so didn't quite make it up as high as it could have, or maybe should have. Still looking for a move up there, and today put in a very nice candle. No breakdown off of the low of that topping candle, so it looks like bears kind of don't have as much strength as they could have, and we may be set up for a move higher. If this price action does start to climb up higher, there's going to be stops above today's high, which is about 2870, and there's going to be stops up here around 2875. So if this initial one is taken out, it's probably going to be enough strength to have natural bulls buying and those bears covering their position and push for another all-time high for the S&P futures. Now back over here to the SPY, we'll go over the levels I'm looking at taking some calls on. Here we go. As always, I have my moving averages, the 8 EMA. I'm looking at 285 calls about 2 weeks in the future. Yellow lines, the 21 EMA. I will be looking at 283 calls in the future. And down here, the 50 SMA is coming up close to this prior support. So I'm still going to be looking at these 280 calls about 4 weeks out in the future. If that does come down there very fast, I'll be happy to take as many as I can. Will give me plenty of time to adjust that position if needed. I don't foresee that happening because that would put in a new lower high, a lower low in relation to this previous dip, and may start putting us into a bearish pattern, and the bears will get excited about that. But right now, it looks to me like there's a massive bear trap there off of that candlestick on Tuesday, and we're probably going to start rolling up higher. Not going to look for any breakout trades. However, if we do get a gap above this trend line on significant volume, that tells me that volume is from bears covering their position. You don't want to short a name that's going to all-time highs because there's nothing to short against. So for that simple fact, stops are going to be in this region. If there's volume that comes up above that level, I will chase and I will take, I'll call it 287, 288 calls about 2 weeks in the future for a nice pop up to this overall measured move from this W pattern, which I still have on my chart here. Been harping on this for months, looking for this measured move up here at around 292, 295-ish. Gets up there, it's officially a brand new all-time high, and any kind of dips after that point can most likely still be bought with a relative amount of safety, in my opinion. These will be my trade plans for going forward. If you have any questions or comments, please feel free to leave them down below. Have a good evening and good luck.